Great. Okay. Good morning, everyone. I'm calling the meeting of the California Housing and Finance Agency Board of Directors to order for our December 14th session. Melissa, can you please call the roll to confirm who's here?
Here.
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 Present. Here.
Here.
Mr. Prince absent. Mr. Russell.
Present.
Secretary Sin.
Here.
Ms. Sotelo. Ms. Sotelo absent. Mr. Mr. Velasquez.
Present.
Mr. White.
Present.
Mr. Williams. Mr. Williams absent. Ms. Mirzad. Ms. Mirzad absent. Ms. Miller. Ms. Miller absent. And Mr. Schultz for Ms. Johnson Hall.
Present.
We do have a quorum.
Thank you very much. The next item on the agenda is the review and approval of the minutes from our last meeting, which was October 26th. And it's in the agenda package. Are there any questions or comments on the agenda, on the minutes from the last meeting?
Move the agenda.
Thank you very much. Is there a second?
Second.
Great. So per our protocol with the motion to approve and second the minutes, they are deemed approved. Thank you very much. The next person just comments. I'll note that our executive director is not here. She's taking care of a family matter. So Chris Schultz has stepped in her stead. I'd like to, again, thank you all for being here. We have the first of what will be a number of our MIP financings to approve today. It'll be an interesting discussion, I think. So we'll look forward to that later. And I'd like to also note that we have a closed session to discuss the Executive Evaluation Committee's review of the Executive Director. And I'm not quite sure how long this meeting will take. We've got it pegged at maybe going up to 2 in the afternoon. It just depends. But there is, as Melissa said, a break for lunch at noon. So I'd like to get that if that's possible, if we're still running through it to that point. So I just flag that for folks. And with that, let me turn to Chris Schultz.
Thank you, Chair Cervantes. So most of you are aware I'm Chris Schultz. I'm the Chief Deputy here at CalHFA. Tina Johnson Hall asked me to pass along to all of you her gratitude for the guidance you've provided in the past year. It's been a successful year at CalHFA, and that would not have happened without the board's help. A lot of that success came in the ADU space. It's not on the agenda today, but our ADU grant program, we opened another round of reservations on Monday for the $25 million that was allocated in the 2022-2023 state budget. I'm sorry, the 23-24 state budget. And as we expected, there was a lot of pent up demand. Reservations for 75% of that money is already committed, and we expect the few remaining reservations to come in over the next couple of weeks, and we'll have a report to the board at an upcoming meeting. Moving on to Dream for All, we have an informational item regarding the definition of first generation home buyer for the Dream for All program. Director of Homeownership, Ellen Martin, will give you a full presentation, but it's important to know that based on feedback from interested parties, staff has made some very thoughtful and tough choices about that, how to craft that first time home buyer definition. So looking forward to that discussion a little bit later in the meeting. CalHFA did attend a couple of notable events in the last month. Director of Policy, Strategy, and Legislative Affairs, Francesc Martí, participated on a panel at the Rural Housing Summit, joined by Director Velasquez and others. Tina spoke alongside Sacramento Mayor Daryl Steinberg and others at a grand opening of RE Place, which is a 159 unit development financed in part by the Mixed Income Program. That's one of 47 CalHFA commitments in the past few years under the MIP program, helping to create 7,600 affordable rental units. As the chair mentioned, later today, we'll have the first of the 2023 MIP final commitments for the board's review and possible approval. Before we get to the agenda, I want to give you one quick update on the mortgage relief program. Continues to have such a big impact on so many Californians. $700 million in grants, 28,500 households who were struggling to help make their housing payments during the pandemic. But beyond the numbers, sometimes we get thank yous, and I just want to share one of those. This is a recent email that came in from a homeowner who said they were brought to tears by the assistance they received. I'm just going to read it briefly. She said, the program really makes the application process as clear, informative, and helpful as possible. They helped correct my careless mistake in my application, answered my calls right away in my email within 2 days with a courteous, informative, and helping manner. Maybe they don't know, but this really helped ease my worries and stress in my financial struggles. I would like to express my deep thanks again. So we should all keep emails like that in mind when we need a little motivation to continue this important work. Chair, that concludes my comments, and I'll pass the floor back to you.
Thank you, Chris. And I think I really do appreciate that last note. I mean, it does seem abstract at times when you look at the programs you're doing, but it's all part of what the governor and the administration is trying to do to further housing as it affects real human beings. So thank you for that, sharing that. The next item on the agenda was the report out of the audit committee. I'd like to note that the chair of the audit committee, Delilah Sotelo, is not able to be here. She's taking care of some family issues. I was there, Member White was there. We had our representative from the state treasurer's office. I've got a recap of the meeting, and then I'll see if members of the audit committee would like to add anything. But the primary meeting of the November 30th audit committee session was to receive an annual update on CalHFA's information security from Ashish Kumar, our chief information officer, and Russell Nakau, our information technology manager. It was a very thorough, thoughtful session. There may be some aspects of that that perhaps might be something we agendize for a future CalHFA board meeting. The committee also completed the annual review, its charter, and didn't recommend any changes to the board for that. There were no actions taken by the audit committee. It was really primarily receiving the report on information security. Maybe with that, I'd like to just pause for a second and see, Director White, if you have any comments you'd like to share from the audit committee session.
Yeah, I would add to your comments. Our IT team takes a very best practice approach nationally. We've invested significantly in terms of the budget in enhancing information security. So during that meeting, I was pretty comfortable with how we're handling any future threats to CalHFA's information platform. So.
Great. Thank you very much. Our next agenda item is the report from the Executive Evaluation Committee. And I'd like to note that that session, we met on the 30th of November also. And the committee's charter is to review the performance of the executive director, conduct the annual performance review, and prepare an evaluation, which is something we'll discuss in the subsequent session, the closed session. And maybe with that, I'll just go right to that, which is, and I have a script here, which I'll follow to make sure we stay above board, which is at this time, the committee will be entering into a closed session pursuant to Government Code Section 11126A1 to evaluate the performance of a public employee. Upon completion, we will return to the open session to complete today's business. And so with that, I will call for the closed session, and we'll move to that right now. Thank you all for your patience. We are resuming the public meeting of the California Housing Finance Agency Board of Directors. Agenda item 7 is a report out from a closed session. We have really nothing to report for that to the public. The closed session is concluded. And with this, I will have the board break for lunch. We will resume at approximately 12:30 and pick up the meeting from there. Thank you very much. So I'm calling the meeting of the California Housing and Finance Agency Board of Directors back in session. We have agenda item 8, which is the project funding approval for the Ira D. Hall Square MIP financing program. Kate Ferguson, Director of Multifamily Programs, will introduce this. And she's requesting the board for approval of the final loan commitment for this project. I will maybe start off saying it, as someone who's spent a career in public finance, I have to salute the people who work on these housing transactions. They have their complexity and flavor all of their own. And we look forward to you walking us through this. Thank you, Kate.
Thank you. Is this? Okay. Good afternoon now, Chair Cervantes and members of the board. For the record, my name is Kate Ferguson and I'm the Director of Multifamily Programs here at CalHFA. Today, I'm requesting approval of board resolution number 23-14, which authorizes the executive director, or in her absence, the chief deputy director, to execute and deliver a final commitment letter in relation to a permanent first lien loan totaling $25,533,000 for the Ira D. Hall Square project. This project is to be located in the city of Sunnyvale in Santa Clara County. Today, I have Kevin Brown with me, who is the CalHFA loan officer who on this deal. And we also have Jennifer Liu of Mid-Penn Housing, that is the developer, on the phone in the event that you have any questions for her. Next slide, please. There we go. So Ira D. Hall Square is the first of 9 2023 MIP project financings, which will be submitted to the board for approval. These will come through in the next 2 months, I expect. As such, I'd like to give the board a brief update on the MIP 2023 program award status. CalHFA has posted our 2023 MIP term sheet in March with available subsidy funding of $50 million. This $50 million was paired with $200 million in a set aside of state tax credits from TCAC and $546 million set aside of tax exempt bond cap available under the Corp non-geographic new construction pool at CIDLAC. The 2023 MIP application and ranking again focused on efficient use of MIP funds, including a bonus for leveraging soft debt. Additionally, in 2023, we increased our focus on incenting first-time developers to partner in the development of these deals, and we included a bonus for geographic distribution in cities with higher population concentrations, both of which paid off in the end. We ended up with 9 emerging developers on 9 of our deals, so very pleased with that. Next slide, please. As I said, the 2023 MIP term sheet was posted in March of 23, and in April, we issued initial commitments for MIP and permanent loans totaling $41.4 million and $272.1 million respectively. In May, these same projects submitted applications to CIDLAC and TCAC for individual allocations of tax exempt bonds, federal 4% tax credits, and state tax credits. In August, all 12 projects received allocations from CIDLAC and TCAC totaling $182 million of the $200 million in state tax credits set aside and $521.7 million of the bond cap available in the MIP pool. Next slide. Very briefly, I'd like to share some preliminary metrics. We'll be coming back once we finish the program year, probably at the end of the first quarter of next year, with all the metrics related to this year. But as you can see, the 12 projects with initial commitments include 2,030 units, which mirror last year's unit production number of 2,102 units. It brings our total unit count for the program since 2019 to 8,952 units. So we're almost to 9,000 units at the end of this year. Our average AMI this year is the lowest we've seen in any year so far at 54%, but our overall AMI remained the same at 58%. You can also see on this slide that the 2023 deals are weighted evenly in low resource and areas of segregation and poverty. We have 6 deals in those areas, and moderate to highest resource areas, also 6 deals in those areas. Next slide. And now just a glimpse of what's to come for the board. Of the 12 permanent loan requests related to the individual MIP projects, 9 of them must come to the board for approval of their permanent loans because the loans exceed 15 million, which is the executive director's maximum approval authority. Today's request for approval of the Ira D. Hall Square project will be our first board submission. I expect we'll have another 6 to 7 projects in January and 1 to 2 trailing in February. Prior to submission to the board for approval, all of these loan requests have previously been underwritten, reviewed, and approved at the staff level. They've been reviewed again at CalHFA's Senior Loan Committee, and finally by the reviewed and approved by the executive director. Next slide, please. So let's get to Ira D. Hall. Ira D. Hall financing request is a copy of the staff report is in your board packages, as long as a copy of the financial analysis. This slide details some of the primary project details. It will be 176 unit, 7-story building project built on podium. The residential units will be on the top 5 floors, above 2 floors of parking. Total cost per unit is $821,071. Importantly, the units provide housing that is at 14 to 70% below market rates. 45 of the units in this project, a total of 25% of the total units, will be available to previously homeless individuals with serious mental health issues. These units will utilize 45 of the 75 project-based Section 8 vouchers supplied by Santa Clara County Housing Authority. Further, these tenants will be supported by Mid-Penn Resident Services and by the Santa Clara County Office of Supportive Services. Project economics on this project are very strong, with a 118 debt service coverage for the permanent loan and a 55% loan to value. Combined loan to value for the perm and MIP loans is 59%. Overall, the tax credit equity will provide 51% of the total capital stack, and the project has strong support at both the city and county level, which we're very pleased with. And with that, we'd be happy to take any questions.
Thank you, Director Ferguson. Are there any questions from members of the board on the project? Director Velasquez.
The table, would you mind, yeah,
Yes.
the affordability range at 30 to 70, but am I understanding that the MIP program is all of the units the MIP program is financing is there 120?
No, we don't have any units over 70% in this project.
Okay, so I saw something.
The MIP term sheet does allow applications to come in with units in the project from 30% AMI to 120% AMI. We haven't funded any units through the MIP program since, I'm going to say, the first year, which was 2019. In 2020 and forward, we haven't funded anything over an 80% AMI unit.
Okay, thank you.
Thank you. Director Russell.
Doctor, thank you.
Director, Dr. Russell.
I had a question about the land lease.
Yes.
I just would like to understand that part of the transaction better, and specifically, I'm interested, I guess I'm supposed to lean toward this, in to what extent does the participation of the city help underwrite the cost or contribute to the affordability?
I would say to a great extent. Effectively, what they're doing is they're entering a land lease, but they're also capitalizing the cost of the land lease with a loan. So what the land lease costs is being covered by a loan from the city. Kevin's going to tell me if I get this wrong. And so you'll note that for Santa Clara County, it's not the total cost of this is over 800,000 a unit, but we have seen in Santa Clara County, because of land costs, the costs go over $1 million a unit.
Right.
So I would say that it's we're very pleased with the overall support of the city and the county in this deal.
Well, and I raise that just because obviously cost is a major issue. In the extent that this is a good or bad example, we're going to be seeing with surplus lands, we're seeing more municipalities throughout the state who are seeing their real estate as something not to be sold, but to be, leased in a similar arrangement. I'd like to know if there's lessons we can learn from this that we can apply, or hold a standard we can uphold when we're dealing with other municipalities.
Yes. every municipality and locality is a little bit different, but we certainly are seeing, in terms of land donations, this kind of structure is not unusual.
Okay, I'd actually like to, if I can get it at some point separate from this discussion, because I don't want to bog down this hearing, really dive into what that looks like, because I'd like
Absolutely.
to understand.
Yeah, we'd be
Appreciate
happy to do that.
if one of you could provide me that. And then I had another question here for this. Well, that's another topic. I will hold off other questions right now.
Thank you, Director Russell. Are there other questions from members of the board? I have maybe one, and I will note that I had a chance to catch up with Director Ferguson before our session to sort of answer a few. But just to clarify, we've locked in the rate on this financing at the 655 level. So that I gather we're hedged on that position of that commitment.
Our Director of Finance.
Yeah, we I need to be at my phone. Yes, so we actually, for our early rate lock that we offered for developers for this year, we actually were able to offer a very narrow window. As you know, markets have been very volatile. And in order to protect the agency's financial interests, we quoted a rate. We sent it out via email. I think Kevin and the other underwriters reached out to the projects that they were underwriting, and we gave them essentially 3 hours to which to accept that rate. So we had an indicative rate prior, so they saw it a week in advance. We gave them a 3-hour window with a refresh, and then everybody said yes. And right after that, in the next hour, actually even I think in the next 15 minutes thereafter, the agency executed its hedges to lock in the rates. So the agency's, again, funding rate would be hedged very quickly thereafter.
And that rate includes our CalHFA spread as well.
Correct. Yes.
Good. Okay. I'll note that.
I had one more
Yes.
question if you're done.
Thank you. It's unfortunate that Director Prince isn't here to acknowledge, so we can acknowledge the work of his agency in helping to bring this program along. I will have to say that it's a complex layer cake of funding levels here with 6 liens plus general partner equity. But to get to a point where you can provide this kind of affordability in Santa Clara County, especially with a population that's under stress, which the county's helping out, the housing authority is helping out with Section 8, to me, it just seems like a real win-win. And in terms of partnerships, and this is a case where partnering with the city of and the county and the housing authority makes for, in this end, a successful project. So
Absolutely agree.
yeah, my kudos to staff and all those involved in this. Director Russell?
Again, a general question, but with the insurance, you're anticipating you have an inflation rate of 3.5%. Are you comfortable with that? I mean, I'm hearing horror stories from when I talk to the development community about anticipated and actual insurance costs.
I think that's from where we are today. We've already, these numbers already are absorbing where we are today, which is about 25% increase over last year in insurance costs. At least. So what we've got in our inflation factors doesn't speak to the inflation of insurance costs that has already hit the markets. So
Okay.
that's in addition to where we are today.
So you started high, and going up from there.
Yeah, we've seen anywhere from, I'm going to say 25, but 25 to 50 to even 100% on some deals, depending on where they're located.
Okay, and I guess I would like a future discussion. This year it's if we can have a discussion more about the impacts of insurance on our portfolio. I hear, yeah. So I will leave that there. I will commend you also helping to put together. I think that oftentimes UMIP is this linchpin for bringing together these diverse sources, making projects happen that couldn't otherwise take place. And very pleased to support the project today.
Are there any other questions from members of the board?
Yeah, I had a question, and I think it's maybe the Director Velasquez's question too, because I see like on the table with the income levels, like at page 17, and so I see that there are no units at 80 and 120. does that mean that the covenants that are recorded on the property, will the covenants on the property be the 139 at 80% and 35% at 120, or will it, the recorded covenants be the 18 units at 70% of AMI, like which will actually be recorded on the property as the covenants that will govern the future income targeting of the units?
For CalHFA, ours are showed, we have under the bond, we have 18 at 50, 53 at 60. I mean, what's here is what will be under our bond regulatory agreement. Then under our CalHFA MIP regulatory agreement, we'll have the entirety of the 174 units. Even though they are showing 120 here, the reason it's confusing is because we show them at 120, but we restrict them in our loan agreement to what you see in the rent limit summary table below. So the regulatory agreements generally are less, not less restrictive, but less detailed in what our restrictions are. Our summary table below, where you see that we have the AMI levels
yeah.
from that, that is really what the AMI levels will be restricted to in our loan agreement.
But it won't be in it won't be recorded on the land, it'll be in the loan agreement. Right, so there's not,
That, well, the TCAC is really the most restrictive.
okay.
There, it's layered with all of these. All of these will be on the
Recorded.
land,
Okay,
recorded on the land. And the TCAC regulatory agreement is generally on every deal the most restrictive, unless you might have a locality restriction, but generally the TCAC is the most restrictive.
okay.
So it's a really good question, because our concern is always that what our financing restricts may not be on the regulatory agreement as restrictive as the TCAC restrictions, which is why we put it in our loan agreement as well. And the TCAC restrictions really run the longest. So I think that's, for me, that's always what I'm
Okay.
looking at. And if you look at that, they're all at 70 and below.
Okay, great. Thank you. I wanted to understand that piece.
Mhm.
Thank you, Director Cabildo. Are there any other questions, comments from the board?
One quick question.
Yes, Member White.
Lease from the city
Mhm.
on the land, is that what's keeping it below $1 million? Or are there other factors?
I think all the soft money that's going into this deal is helping, but yeah, that's a huge
That's
factor.
good. Okay. Thanks.
I'd also like to just make a comment, say, I mean, as you can tell, we're heavily invested in this from the treasurer's office. We believe this is the type of project that California needs to, apparently my watch thinks I'm working out. My heart is elevated, but we're approving a lot of money here, and I think that we do need to take that type of caution. But this is the type of project, as you heard earlier, where you do have the city buy-in, you have the county buy-in, you have multi-layers of the state, because what we're really trying to do here is make sure that we're providing housing to those in need, just because this is an area where the median house is a lot bigger and a lot more sizable. We do need to make sure that the workers there, the people that service the communities there, have a place to live and have a place to thrive. And this project is one of those, in our opinion, and we're very much supportive of it.
Thank you.
Thank you, Director Henning. Any other questions, comments from the board? Don't see any hands going up. So at this time, I'd like to see if there are any members of the public that have a comment on this agenda topic. If so, please raise your hand, and I'll ask Melissa to see if there's any comments. We'd like to make sure that they stay at 2 minutes or less, if that's possible. Any members of the public?
If you'd like to make a public comment at this time, please raise your hand and we'll call upon you. We do not have any raised hands at this time.
Thank you very much. So bringing it back to the board, I'd like to see if there's a motion to approve the resolution to, I have a resolution number here too, to approve our commitment for this financing program. And
Motion to approve, Mr. Chair.
thank you. This is resolution number 23-14 of from Director Henning, motion approved. Director Cabildo, second. Melissa, could you please call the roll?
Yes, Ms. Avila Farias. Ms. Avila Farias. Oh, all right. Ms. Avila Farias is absent at the moment. We'll try coming back to her. Ms. Cabildo,
Yes.
Chair Cervantes,
Aye.
Ms. Grant,
Aye.
Ms. Lamone. Approve. Mr. Henning,
Aye.
Mr. Russell,
Aye.
Secretary Sin,
Aye.
Ms. Sotelo, oh, excuse me, Ms. Sotelo is absent. Mr. Velazquez. Dr. White,
Aye.
Mr. Williams. I'm sorry, Mr. Williams is absent. Would you like to hold the motion open until Ms. Avila Fria? Oh, okay, I'm sorry. I've been told that she has actually left the meeting,
I
so
believe she
I'll
has
mark
left,
her
yes.
absent. And we do have Resolution 23-14 is approved.
Great. Thank you very much.
Thank you.
And thank you. And I'd like to make one last note, which is we'll be seeing a lot of these financings at our next meeting. And then with one after that. And there's a lot of complexity here. I talked to Director Ferguson about the idea if the board members are interested in getting into aspects of these transactions to understand them better, staff is ready, willing, and able to do that. It could be a one-on-one, it could be with several board members. We can follow up. I'll talk to Director Johnson Hall about that. But it's a beauty in the complexity here, but it gets, as Director Henning said, work done for the people of California. So thank you very much.
Mr. Chair, as we have projects that involve CIDLAC or TCAC, we're more than happy to make sure a representative from our office is there to help people through
Great.
that.
Thank you very much. Thank you. Okay, we are moving on to next agenda item number 9, which is a update on the strategic plan. Rebecca Franklin, the Director of Enterprise Risk Management and Compliance, and Erwin Tam, Director of Finance, will walk us through this. Thank you.
Good afternoon, Board Chair and Directors. My name is Rebecca Franklin. I'm the Director of Enterprise Risk Management and Compliance for CalHFA. My teammate and I, Mr. Tam, are here to present the first of the current strategic plan quarterly reports. I think as some of you remember, in May, we were in this room and there maybe had been some lemon bars as well, but we had presented the strategic plan for CalHFA and the business plan. So some changes that had happened in May was we presented a 3-year strategic plan. So that plan will run through 2026 and a 1-year business plan. So talking about the strategic plan, there's 4 main goals. Those goals are measured through strategic measures. So when we come to you guys and we say we've achieved this goal or we didn't achieve this goal, that's through a measurement. The strategic measures kind of outline that, as well as we have strategic objectives for the next 3 years. Those run till 2026. Those, as I remind the board, are the vessel or the mechanism that we are pursuing to achieve those goals and move those measurements and keep them green. The annual business plan is in a set of initiatives, and so that's the next rung down. So for accountability and transparency purposes for the agency and for the leadership under the executive director, Ms. Johnson Hall, we want to present, and we committed to presenting quarterly updates on the strategic plan. If everything goes according to plan, then these measures will stay green. So this is the first time we've presented this. So we will start with the stoplight chart. So presenting the measures themselves, that's really equating to whether we're going, next slide, equating to whether we achieve the goal. So there's 4 goals. Each goal has a series of measures. We will present these. What we're proposing for the board is to present these in an exception reporting fashion. We do like to celebrate our successes, and we're very excited when we do achieve great things. But for the purpose of this board and the amount of information the board members receive and the directors, we really wanted to focus on exception reporting. So if things are green, they're going well, we're projecting well, we're just going to leave it at that. If something is at risk, and you can kind of see the different tolerance levels in your board packet for each measure, future, then we will acknowledge that. We will file what we call an exception report, which is outlining the mitigating activities we're deploying in order to kind of right the ship and go back to green. So the yellow is we are projecting that we may not hit the goal. And then red is a current projection that we would not be hitting the goal. So we will really focus on exception reporting. Good news, and it makes my job a little bit easier today. We're green on all the measures. So we don't have any exception reports on the strategic measures themselves. We do have an exception report on one of the strategic objectives, which I'll get to later in the presentation. So I wanted to delineate one thing on for your packet. For goal 1, when we talk about lending impact, if you look at the tolerance levels and the dollar amounts that we're associating with these different measures, they are talking about growing CalHFA core products. So that's not measuring the total impact that we would be achieving for the state of California in the unit counts, et cetera, because we get the honor at CalHFA to deploy different set of funds in different programs. Ms. Martin obviously will be talking to you about one of those programs, which is Dream for All. So when we talk about strategic growth for CalHFA, we are really honing in on our core products, which is My Home, Zip. So when we talk about growing things by 5%, that's really the CalHFA products. So when you compare, anticipating any question of, I looked at the business plan chart about unit production and I'm looking at your strategic measures, those will be different numbers, different goals, because the business plan is really those production numbers, which Mr. Tam will review with you guys, is about the total impact that CalHFA has on the state when it comes to unit and production and volume. So I wanted to delineate that. So the strategic goals are growing our products, and then the business plan goals are really our total contribution to the state of California. So that's goal 1. Goal 2 is financial sustainability, which is the strategic measures. That goal, as we outlined in May, is really about growing and being innovative. The market conditions are ever changing. We just discussed insurance premiums, which who knew that was going to be such a heavy influence in the we can't predict that. So we really want to be able to be innovative, agile, and producing new innovative products to help further the policy, the housing policy and the affordable housing space in the state of California. But we want to do that within the risk tolerance of the board and the risk appetite. So really looking at the goal 2, we're talking about being innovative, delivering new products to the affordable housing market, but also doing that with the mindset of the ratios, what returns we need. We want to make sure that we're setting ourselves up for success financially in the long run. So that's the financial sustainability. Again, these are all green currently, so I'm not going to be going into detail on each measure. Goal 3 is trusted advisor. CalHFA does great things for the state of California in the affordable housing market space, and we want to make sure that we are taking the lessons learned, our experiences, our expertise, and sharing that with the housing continuum as a whole. And so this is really talking about researching, studying, being at the table, sharing our experiences, our expertise in the affordable housing market arena, not only just in California, but nationally. Ms. Johnson Hall just had the honor of being elected to the NCSHA board. We want to make sure that we're talking about all the great things that this agency does, as well as the state of California. And then the last goal, any good strategic plan is going to have an operations goal, an operations focus. We want to make sure that we are good stewards of funds, that we are acting with a fiduciary mindset in all of the funds that we are displaying. And that means we have the right people in the right place, trained to be able to do their jobs, and making sure that we have efficient processes, that we're looking at internally, making sure that we're doing a good job of, of streamlining things where we can, moving the needle along, et cetera. So that's kind of what the stoplight chart would look like quarterly for the board from the strategic measure point of view. Again, if something is yellow or red, we'll file an exception report in which we'd have a much more detailed conversation of any mitigating activities we needed to deploy. I'm going to chop this up a minute. So I'm going to take any questions on the stoplight chart portion that's strategic measures.
Thank you. Are there any questions from members of the board on Ms. Franklin's presentation?
Yeah, I have a question I just want to say, I love this dashboard. It's so readable. I'm going to be stealing some of your hat tip to you though, when I do that. But I'm curious, I know that we have a real interest in serving California's diverse population. And I'm curious if there's an opportunity in goal 1 lending impact of capturing that we're actually serving the diverse populations of California, because I think right now it really speaks to volume, but doesn't necessarily tell us if we're having the desired impact in diverse communities. So I'm wondering if there's something that could be added that would capture that.
Yeah, I think what we can do is bring in that there are business plan initiatives that are collecting data around our impact, around especially researching the different various diverse communities within the state, ensuring that we're tailoring our products and services to encompass the different needs of those diverse communities. And so at the initiative level, I think we do have initiatives around that topic. So what we can do is pull the data from those initiatives, and when we present, we can definitely highlight any information at that time, if that's acceptable. Okay.
Otherwise, I love it. It's wonderful.
I did have some questions about just some of the terminology that was used, but Mr. Chair, I can wait if there's a different time to ask those questions or ask them now. One of the measures that you have is public presence and publications. We're going into the Department of Finance has just issued a budget letter talking about necessary and essential travel. I would imagine that these appearances will go down because of that new definition of what is acceptable by the governor. Is that fair to say? But you still are hopeful to hit your goal?
I mean, I think at the time of this report is Q1, so the data collected would have been as of September 30th. I think the budget letter just got released
yesterday.
Yeah, so I don't feel like I have the appropriate answer for you, but I can say if we do feel that the budget letter does affect, and with respect of adhering to the budget letter, CalHFA will be doing, our due diligence is that as well, then we would mark it yellow, and then we would bring it back to the board at that time for the Q2 report.
And then under goal 4, you talk about filling 80% of all key positions.
Correct.
How are you defining key positions? Because I will tell you in my department, the people that do the administrative work on a day in, day out basis are probably the most key to the operational systems of the treasurer's office.
While we do respect that the day-to-day work are essential to us being able to execute our different programs and processes, we did define that more so focused on the leadership positions, as the leaders are not only experts in the affordable housing market ourselves, as well as the different layers of leadership, but that those key positions are the ones that are, ensuring the work is getting done by the analysts. Those are the ones that are, driving the culture and engagement of CalHFA. So while I do respect that everyone here at CalHFA is contributing to the larger goals, the key positions were defined more as leadership positions at this time.
About how many are there?
24, less than 25, more than 20.
And how many positions are there in the entire department?
170.
The agency has an authorized headcount of 221, and we are currently at approximately 180.
Okay. Yeah, I would reiterate that concern, particularly because I imagine that you consider some of the key positions, much like the chief deputy's position, which are controlled by an outside appointing entity, not by just sort of the state government's rules. And so I'm concerned that this is not showing enough.
I note taken. At this point, I think that we can definitely track any turnover numbers for the full staffing and report that back to the board if we find anything that's of significance at this time.
Yeah, that would be helpful. I mean, your vacancy rate is, I would consider risky moving forward. That if it starts drifting lower, I think that that's something that the board would be concerned about, your ability and the ability of those key managers to be able to move their processes and ideas forward.
Yeah, very well noted. We can bring that back as a supplemental, as well as the information that was requested on goal 1.
Any other? Oh, sorry, please.
One more question. I'm gonna echo what others have said. This is fantastic. So thank you so much for this quarterly reporting. My question kind of builds upon Director Gabriel's comment, and I'm not sure if it's perhaps within the single family lending metrics or if it's within goal 3, which is partnering and participating in housing finance data analytics reports. But one of the things that I'm interested in understanding is what role is CalHFA playing in the single family lending space? What void is it filling when comparing to other products available in the market, compared to FHA, compared to conventional lending? Who are the individuals that CalHFA is able to lend to within the state of California, and understanding kind of that niche and what role and perhaps is there, are there other segments of the population that the rest of the market isn't meeting or serving the needs of, so that we can kind of recalibrate on that.
Yeah, I think what will maybe be helpful for the board is that we will be bringing, obviously back in May, the new business plan, which is the set of initiatives, and respecting Director Cabrillo's comments last year. I remember in May that we have a lot of initiatives around researching and understanding, especially in context of the diverse population of California, and being able to do. And so I think when we talk about the at the initiative level, at that business plan initiative level, when we talk about the outcomes of what those initiatives were, and then being able to then align the new set of initiatives based on the findings of this year's initiatives, I think that maybe that will give more context. And so if that is acceptable to the board, we can commit to kind of, when we talk about the end of year and what we have accomplished at that initiative level, and those qualitative conversations, not just quantitative, right? Understanding diverse communities isn't just a number, it's really understanding. And that's something that I genuinely have experienced with the mortgage relief program itself. So taking those lessons learned, the information that we have gathered on those topics, and sharing those outcomes with the board, and then kind of seeing where we want to go next with our next year's business plan initiatives, I think maybe will help the board get more information on that.
Thank you.
Any other questions or comments on this topic? Director Russell.
Yeah, just real quickly. First of all, I do want to concur with my fellow directors. This is an excellent reporting format, and I think it's going to be very useful given the breadth of what we're asked to know and understand, or try to at least. You brought up the issue of when you talk about the mortgage relief. I've been firsthand witness to how you have done an iterative process of continuing to refine the outreach to improve the various channels by which we achieve the goals of our programs. And we've been able to borrow, and I think that's the strength of this agency, is the diversity of programs actually gives us different approaches. I am concerned, given the budget situation, that we are going to see Dream for All and the ADU program and maybe other programs fall by the wayside. And in the context of this culture of learning here, how do we preserve that? Well, we'll be getting a final report on the program with when those last funds are expended, such that we can capture those learnings. And because we're going to pick this trail up again, we are not always going to be in a budget deficit. We will want to do these programs again. And can we encapsulate some of that knowledge in a meaningful way without, again, I know times change, programs change, but you've done so much work. And the outreach is one area in particular that I'm familiar with, how we deal with the different kinds of community organizations. I'd like to, I guess this is less a question than a statement. I'd like that we capture this knowledge that you've earned.
If the board would like some sort of debrief report, especially on the outreach around the mortgage relief program and our other program offerings through CalHFA, I think Ms. Martin and I would be more than happy to do that. We sit about 6 offices from each other, and I have better candy, so Ellen is usually in my office. But we've had a lot of more serious business discussions around community-based organizations, meeting people where they're most comfortable in a language they're most comfortable. I mean, when we're shaping the CalHFA products now, our outreach and marketing, we do, I think Ms. Martin has all the knowledge I've accumulated in the last 3 years for mortgage relief and then some. So I think if the request of the board is to kind of have a report out, then I respect the chair at that point. But I know that Ms. Martin and I are kind of lockstep on some of those learnings when she's rolling out her products.
That might be a topic maybe for a February-ish board meeting then. I think I'm picking up the theme here of interest in this. Thank you. Any other last questions before we move on to Mr. Tam?
Tina? Good afternoon, Erwin Tam, Director of Financing and first runner-up on the Lemon Bar Challenge. It was one vote. I'm still waiting for a recount. So on page 6 of this presentation, you'll see the sort of the strategic plan highlights. We're going to bring this forward to the board, sort of just to on again highlighting the quarter's results. First, again, is our upgrade to AA2 on the agency's issuer credit rating from Moody's Investors Service. And not written here was that also our first bond issuance underneath the agency's affordable housing revenue bond indenture, and that was in August of this year. If you look on to its right, again, the multifamily programs received its volume cap authorization allocation in August of this year as well. And furthermore, we actually securitized the remaining loans in the Dream for All program that was launched in spring of last year. On the next page, you'll see the production updates from both the single and multifamily divisions as of September 30th. The single family program started strong with a $1.1 billion of securitizations, and multifamily revenues, just as referenced, because of the nature of the CIDLAC approval cycle, we're sort of at the beginning, and you've seen one of the projects which will then add to this total for this fiscal year. So again, this only encompasses revenues received up through September 30th of this year.
So if we go to we're on the next, thank you. So if you go to the left-hand column, as I indicated before, the strategic plan is not just made up of the goals and the measures, but there's the objectives underneath. So we are also going to be reporting at the objective level as far as exception reporting. So over the course of the 4 goals, we have 12 total strategic objectives. Right now, we are trending about 90-11 of the objectives are on target. One of those objectives we have marked in yellow, which is at risk. The exception report is in your packet. That exception report is mainly on, there was a change to the law around the workforce plan reporting, and we are awaiting further guidance of CalHFA to be able to complete that plan. So, but in all transparency, it is at risk of not being completed by the deadline, depending on when we get the guidance. So we wanted to make sure that we communicated that to the board. So far of our objectives, which is the layer down from the goal, right? That's how we're going to move the needle on those measures, make sure they're green. We're trending green on all of those objectives thus far.
In the right side of that same page here, you'll see the operating budget, and this is actually the operating expenditures of the agency, and we're running at a rate below the budget level. There's been a change in the agency's financial systems where we're able to close the books on a monthly basis, and so what I'm planning to do is in the January board meeting, actually present the mid-year update to the board. I know in past years, the board has seen this in March, and the timing doesn't quite, it was more because we would miss the January meeting in terms of closing the book. So therefore the next board meeting would be in March. But I think we're in a pretty volatile economic environment. So we should go with the most up-to-date information. It will most likely have a 5-month actuals, and we'll make a projections for the end of the fiscal year. So again, that's coming to the board in the January timeframe. I think that actually wraps up our presentation. That the following slide again is the report that Rebecca just referenced, and we would take any questions that the board may have.
Thank you. Are there any questions or comments from the board on Mr. Tam's and Ms. Franklin's discussion? I think I just would say I, for one, if we can get if we're closing up monthly, we can get the data out in January for the first half of the year. I think that's terrific. I guess my follow-on question on that would be, does that mean that the audit could get done on a faster timeline than in the past?
As you know, the delay in the agency's audit, we actually had our auditors in November of this year for the fiscal year ending June 30. However, we always are waiting for our proportionate share of our pension and OPEB liabilities, which comes from other portions of the state. So essentially, we would have a draft final or have a draft final on time for the agency.
Okay, so we'll do our part then.
Yeah, our part's basically done at this point.
Thank you. Any questions from the board? If not, I'd like to see if there's any questions or comments from members of the public. And again, we'll ask that individuals keep their comments to 2 minutes or less. And Melissa, can you see if there's any hands raised from members of the public on this topic?
If you're interested in making a comment at this time, please raise your hand and we'll call on you. There are no hands raised at this time.
Great. Thank you both very much. That was very helpful. Appreciate it. Thank you. We're going to move on to the next agenda item, which is agenda item 10, the Dream for All update. Ellen Martin, our Director of Home Ownership, will walk us through this part of the agenda. Thank you.
Can you hear me okay? Better? There we go. All right. Well, good afternoon, Chair Cervantes and members of the board. My name is Ellen Martin, and I'm CalHFA's Director of Homeownership, here today to provide an informational update to the board on the California Dream for All program. So if we could jump right into the first slide. So today I'll be providing an update regarding phase 2 of the program, specifically focusing on changes to the definition of a first generation home buyer and providing an update regarding implementation for the board's awareness. Next slide, please. So to review, at the October board meeting, the staff presented the general Dream for All phase 2 program parameters, and the board approved the appropriation of funds for phase 2 of the program. As a reminder, the trailer bill language regarding Dream for All includes a requirement that CalHFA establish a definition of a first generation home buyer and target funds to said first generation home buyers. So in October, we presented our working definition to the board, and that working definition was essentially, I'll paraphrase, that the borrower has not ever been entitled to any home in the United States, and that their parents have not been entitled to any home in the United States in the last 10 years. Since that time, we did receive feedback from a significant interested party that had some concerns regarding that original working definition. In particular, that the original working definition was too restrictive and did not adequately address the potential for hardships that a borrower might experience that would diminish or even nullify the wealth building effects of homeownership. So we then conducted additional stakeholder outreach to ensure that we were reaching all parties with an interest in this topic, and worked to develop a new working definition that reflects consensus with those engaged stakeholders. If we could go to the next slide, please. So the overarching intent behind first generation homebuyer programs is that we assist those borrowers who do not have the advantages of intergenerational wealth associated with homeownership, as well as the knowledge and resources that come along with homeownership. But we do have to acknowledge that there are significant complexities associated with coming up with a definition of first generation, and we had to really grapple with some of those complexities as part of this process. The Urban Institute had a quote in a study that was recently published that I think is really enormously appropriate to the process that we went through. What they said is, an effective definition of first generation homebuyer should sufficiently target low wealth households while maximizing the number of potential recipients. It must also ensure that verifying eligibility is not operationally burdensome. They go on to say, these criteria then pose a three-way trade-off. Too wide a pool may not adequately target those who need assistance. Too narrow a pool will unnecessarily exclude people who need the assistance. And complex eligibility requirements can dissuade lenders from offering the program and discourage borrowers from participating. So with, I think, that very helpful context that really sets the stage for us, as we look at the first generation definition, there's really four primary components that we're thinking about. First of all, what are the homebuyer characteristics? Can a first generation homebuyer ever have owned a home at all? what about a primary residence versus a vacation or rental property? And then how do we account for foreclosures associated with homeownership? How do we account for things like for those hardships associated with things like a foreclosure or a divorce or other unforeseen financial circumstances that could lead to a hardship associated with homeownership? We then ask similar questions about the parental circumstances, with added concerns surrounding things like end-of-life care, acknowledging that many seniors have to, in fact, sell their home in order to pay for those costs. We then need to have special provisions for borrowers that grew up in foster care, as well as considerations included for things like family estrangements. What happens if a borrower doesn't know their parents or doesn't know their parents' home ownership status? And finally, and really critically, can the information that we're requesting from the borrower be independently verified? And also importantly, can it be verified accurately and efficiently with consideration to the very concentrated window of time that we will have to review and verify information? That's a really important factor to consider. Next slide, please. So here is our updated definition. And again, I'm being a little repetitive here, but it's really calibrated to meet 3 overarching goals. We're looking to meet the policy intent that the borrower has an opportunity of home ownership. We're also looking to offer flexibility for those who have owned a home but have met some sort of hardship that diminished that wealth building effect of homeownership. And then finally, we're looking for a definition that is administratively feasible. We'll have a lot of loans, a lot of borrower eligibility to review, and we need to make sure that we can process and QA/QC these borrowers very quickly and very accurately. So for the borrower, our definition is now years. So this accommodates those hardships that I've discussed. Importantly, it's coincident with the timeframe under which the foreclosure is reported on credit reporting and how long it can take a borrower to recover from bankruptcy and foreclosure. It also ensures that the borrower does not own a vacation or rental property. For the parents, our definition is updated to say, to the best of the borrower's knowledge, the borrower's parents do not own a home, or the borrower grew up in foster care. So this is referencing a definition used in the Federal Down Payment Towards Equity Act. It also aligns with definitions that we've seen used by the Fair Housing Alliance with regard to first-generation homeownership. It accommodates those hardships and special family circumstances that we've discussed, but still does seek to target the assistance to borrowers that have not benefited from homeownership. The Urban Institute, I will paraphrase again, the Urban Institute points out that their research shows that parental homeownership that was not sustained for the long term does not have significant effects on children's homeownership likelihood. So we tried to incorporate that circumstance as part of our considerations in this definition. And then finally, this definition relies on information that we can accurately and efficient frame that we will be under. Next slide. So I'll end with a quick update regarding our implementation timeline. With this work on the definition, we are finalizing the program parameters and building out the infrastructure needed to support the changes. That namely is the pre-registration system. Shortly after the new year, we expect to update all loan program information and then begin educating our business partners. So that includes the housing counseling agencies, the lenders, and the real estate agents on the updated program parameters. We'll also begin distributing toolkits to our program champions. That includes all of you. And grassroots organizations that will help us spread the word. And we'll start to roll out direct consumer marketing in order with the target date of opening the portal in early spring and issuing vouchers in mid-spring. So with that, I'm happy to answer any questions the board may have.
Great, thank you very much. Are there any questions, comments from members of the board? I see Director Limon.
Thank you, Cervantes, and thank you so much, Director Martin, for keeping us appraised to all the changes and the iteration of the program. Thank you for the frequent updates to to the program. But I have a couple of questions. You mentioned the Urban Institute report, and the Urban Institute report, when the down payment towards Equity Act was being orchestrated, there was an analysis that was made by the Urban Institute to understand how some of these parameters were going to be a proxy for things like race and ethnicity. And I know the same data doesn't exist for the state of California, but if there is a way to engage in some sort of partnership so that that data analysis can be done even before the pool of individuals that are going to be eligible for this program with these changes, and understand who are they and how does that compare to who actually got the loans. So have you guys had any conversations about that sort of analysis, or what are your thoughts on that?
So we do have access to two important sets of data with regard to the population of first-generation homeowners. We have been collecting data regarding first-generation homeownership under a much stricter definition, which essentially defined first-generation homeownership as a first-time homebuyer whose parents never owned a home. So actually, pretty closely in line with one of the Urban Institute's primary recommendations. So we looked at data from the original round of Dream for All that showed about 52% of phase one Dream for All borrowers were in fact first generation. And we looked at how that impacted the borrower population. And then also we looked at our My Home, the distribution of our My Home borrowers who identify as first generation and not first generation. And we looked at the respective distributions of those populations. So we do have that data, which really helped us to inform and land on the definition that we're looking at here. And we'd be happy to, I think, to connect with you and show you what we're seeing.
That would be helpful. Thank you. And my other question, two other questions. You talk about time limitations on past ownership interests to account for foreclosures and divorce. What are those time limitations for those particular circumstances?
So in this circumstance, we identified 7 years as the window in which a borrower would have to have not had an ownership interest in a home. So in other words, if we say the borrower hasn't had an ownership interest in a home for the past 7 years, that's something that we can see on their credit report. And so that's information that we can verify.
So the bit about divorce or things like that, that's just color in terms of the things that might have cost.
Correct.
A lot.
Yes, yes, that's exactly right.
All right, so my next question is, how do you mentioned that some of these different restrictions or definitions of first generation allow for an easier way to track and verify the information. How do you verify family estrangements?
So that will be part of the way in which we engage with borrowers through the verification process. So in other words, we may have a borrower attest that they have no knowledge of their family's ownership or their parents' ownership of a home, right? And so if we then turn up information that contradicts that during our audit, we will engage with that borrower and ask them to provide additional evidence regarding their status.
Okay. That's the only one that concerns me, but the rest make a lot of sense.
That is I think you're right to note that, because I think that's the biggest challenge here.
Yeah, thank you.
I have a good question about it. Maybe I believe you did cover this before, but why the reference to just the United States?
Essentially, that is the information that we will be able to verify via publicly available data sources.
When you were just previously talking about the self-attestment, why wouldn't we ask them just to self-attest that they don't have home ownership in another country?
We would not then necessarily be able to verify that information through our QA/QC process.
Right, but if we're asking for self-attestation in one area, and that is enough of to allow us to move forward, why isn't it acceptable in another?
We are not just accepting self-attestation. We are also verifying the information independently.
And federal policymakers also came to that same conclusion on homeownership outside of the US. I think it's the verification part that was the most concerning.
Yeah, it seems like, I mean, particularly because we are a border state, that there seems to be concern. But if that's if that is the a standard, then I understand that.
So this is a test but verify
Correct.
approach you were taking.
Yes, we will be asking borrowers to attest under a very strong penalty of perjury statement, but we will also be conducting a QA/QC and verification process to ensure that folks are attesting accurately.
Any other questions, comments from the board?
Just, if I may just make
Yes,
a
Dr.
comment,
Russell.
I always appreciate the level of data driven, the research driven, putting policy into effect is it's really important that we, have this kind of information. The analysis I think is very cogent, and I appreciate the work that you're doing.
And I guess I would chime in that supporting that notion. I think this is very thorough and thoughtful. Really appreciate the effort that you and your staff have gone through for this. The only concern I'd have here with this is maybe just given the bigger picture for the state budget, the timeline, but we'll hope that we can actually roll this program out without a speed bump.
We will keep the board apprised.
Thank you. Appreciate that. Thank you. Are there any, I want to see if there's any questions, comments from the public at large. Again, we're going to ask individuals to hold their comments to 2 minutes or less, and I'll ask Melissa to see if there are any raised hands from the public.
If you'd like to make a public comment at this time, please raise your hand and we'll call on you. We do ask that all comments be made orally at this time. So please, if you have a question, please raise your hand. Not seeing any hands raised at this time.
Thank you. And before you go, I think we have one last, you have a question?
Just a comment for the board. While members of the public don't always show up at these meetings, they do read these packets and they do listen in. This was discussed in October. As a result of that meeting, stakeholders reached out to Director Martin and said, hey, we saw that definition in your packet. We heard the discussion at the board. We have some comments, and that's why it's back to us. So while there are not always members of the public here to address us, these public meetings do have the good effect of airing proposed definitions, and public comment does sometimes come in, not always at the meeting, but following the meeting. Thank you.
All right. Thank you very much. Really appreciate it. So we're now on agenda item 11, information reports. There's a couple of reports that were in the agenda package. Staff's here to talk through them. If their board members have questions, we've got the multifamily quarterly loan production report and the asset management quarterly report. I'll pause for a second to see if there's any questions from members of the board on those two reports. I do not see any hands raised. And
Actually, Mr. Chair, the multifamily loan volume chart, that's where we've arrived now.
right.
I would like some illumination on that. Just
He's here.
So is there
it just seems we're falling. This is one of those yellow light moments, it appears, but I'm sure there's a story there.
oh, Steve. Surprise entrance. Welcome.
Surprise guest, right?
Yeah.
So, sorry, you had a question?
The question is just to illuminate. I'm looking at page 68, and what I'm reading is that we're very far short of certain goals in the first quarter, and I just thought some context, and that would be useful.
So, and I think Director Tam spoke to this earlier. I wouldn't look at our production as linear, where it's going to evenly go up each year. If you look at some of the projections that are coming up, I think that thank you. I think that we are on target to hit all of our goals at this time based on what's in the pipeline, except for we know we won't hit the MIP commitments. And I think there's been the explanation given to the board before because we had more MIP than we had available tax credits, state tax credits set aside for that program. So our goal was set for 50 million. and we're going to do about 41.5 million there. But we knew that, for a while now. The other goal right now, if you look at the pipeline that is a little short, is recycled bonds, but we get a lot of recycled bond deals in short term. So we can still achieve that goal based on applications we get, in the first quarter of next year. So we'll see, but everything else right now is projecting to exceed the goal.
Okay, so underlying conditions don't, you don't see underlying conditions that suggest this is going to be a.
Not at this time. I mean, I think nothing's guaranteed until the deal is closed, right? So we can't say for sure that all of these are going to make it across the finish line, but based on what we're seeing now, based on what our pipeline looks like, we think that we'll be in pretty strong position to exceed our goals.
Very good. Thank you very much.
Yep.
And thank you.
Any other questions from members of the board? Thank you very much. We're on agenda item 12, which are any other board matters. I'd like to see if there's any topics that board members have. I made a few notes. Director Cabildo asked about in the information, greater clarity on how we're serving diverse populations. That's something that we'll look at, I think, for a subsequent session. Director Limon had a note about CalHFA's role in the single family area with other organizations. There was some discussion about sort of a maybe update briefing for board members who might be interested in the multifamily loan process, maybe with some help from the state treasurer's office with respect to the CAC-TAC process. Those are a few notes that I made. Again, we'll likely talk about this with our executive director session probably in February to sort of talk through conceptual big picture ideas on work that CalHFA might be doing to further the broader housing agenda of the administration, and maybe as a prelim to the strategic planning that we engage in every year. So those are some of the items that I had made notes of. Are there any other topics that for a future session that a board member would like to note here, and we can take that into account?
Just an update on how the ADU grant program is going.
Okay. ADU grant program. Thank you. Thank you, Director Limon. Any other topics? And not limited to this time and place. We can pick that up later on as well. I'm not seeing any. And then our next to last item is public comment. And these would be an opportunity for a member of the public to weigh in on anything that wasn't on the agenda. I'd like to see, Melissa, if there's any hands raised, and we'll give folks 2 minutes to make their comments. So let's see if there's any members of the public who'd like to weigh in.
If you have comments that you would like to raise at this time, please raise your hand and we'll call on you. No hands are raised at this time.
Thank you very much. And with that, we're on our last time, which is adjournment. So I'll note that we are 20 minutes of 2, so we're 20 minutes ahead of schedule. So you all have a productive day. Thank you all so much. Meeting adjourned.